Hello everyone, hope you all are doing well. So in today's class we are going to discuss the question number 3. This is exam practice exam number 2 under your CBE practice exam section. So before starting the question, I would recommend you to open this question on your CBE platform. Once you open your CBE platform, there is a section of practice exam, and in that section this is exam number 2. You can see the exam 2 valid from September 22. So in today's lecture we will solve question number 3, Beth and Company, and the client name is Matty Company. In tomorrow's class, we will discuss question number 2, and day after tomorrow, we will discuss question number 1. In the previous past papers series videos, we start from the question number 1, but now I am revising my approach as I will solve question number 3 first, then question number 2, and then question number 1. Why the reverse approach? Because the audit risk of material misstatement, and the business risk along with procedures are almost the same pattern followed by the examiner in all the question number 1. There is a fixed pattern in the question number 1. But question number 2 and question number 3 doesn't have a fixed pattern. So it's sometimes difficult for the student to pick the correct scenario. So that's why from now onwards, my focus is to discuss the question number 3 first, then question number 2, and then question number 1. It's just a reverse psychological approach. Doesn't require any further changes or attention. Let's start today's lecture. This is question number 3, practice exam 2. It is 1st July 2005. You are a manager in Beth and Company, a firm of chartered certified accountant, responsible for the audit of Matty Company for the year ended 31st March 2005. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Exhibit number 1, audit completion review. It means audit has done. Provide details of matters which have been brought to your attention by the audit supervisor. Exhibit number 2, update and draft auditor's report. Provide an update on the outcome of initial discussion with the client and details of the auditor's report, which has now been drafted by the audit supervisor. This information should be used to question requirements within your chosen response option. First, read the requirements. Sorry. Part A. Using the information in Exhibit 1, this one. Comment on the matters to be considered and explain the audit evidence you would expect to find during your review of the audit working papers on 1st July 2005 in relation to the issues identified. The following mark allocation is provided as guidance for this requirement. 1. Railway operating license and going concern. Number 2 is purchased customer list. The part 1 and part 2 is more likely about IAS 38. Part B with reference to Exhibit 2, this one. And assuming that no further adjustment will be made to the financial statement in relation to the railway operating license, evaluate the appropriateness of the draft auditor's report produced by the audit supervisor. Then we have professional skills mark. Professional marks will be awarded for the demonstration of skill in analysis and evaluation, and professional skepticism and judgment, and commercial acumen in your answer. Okay, now let's start the exhibit number 1 reading. Audit completion and review. This is part A. And in the part A, we have to solve about the railway license and going concern. And in the part A2, about the customer list. Matty Company is a listed transport company which provides train and bus services for the public on a national basis. Highlight this thing. In this line, the examiner gives you the idea about the nature of the client business and the entity type. This is a listed entity and the operation of this entity, Matty Company, is to provide train and bus services for the public on a national basis. The audit of Matty Company for the year ended 31st March 2005 is nearly complete, and you are reviewing the audit working papers. Matty Company is a new audit client. Again, highlight this thing. Why these things are given by the examiner? Just a minute, I will explain each and everything to you. Is a new audit client for Bath and Company this year. The previous auditors issued an unmodified opinion on the financial statements for the year ended 31st March 2004. Last year audit was done by another audit firm and they issued unmodified means clean opinion. Matty Company's draft financial statement recognized revenue of 60.1 million, profit before income taxes of $10.5 million, and total assets of 28.4 million. Materiality has been set by the audit engagement partner at 1.05. Now, once we move to the answer, on the answer sheet or on the answer slide, you will see I have determined the materiality based on these three figures because in the previous CBE platform, this in this question there was no materiality given by the examiner. But now they updated their CBE platform and they also updated the questions. So now they have given the materiality, but we will follow the previous approach because I have mentioned so many times in my previous past paper lectures that if the materiality is given by the examiner, then you should have to follow that materiality. But we are following the old past paper question. So in that, we will calculate the materiality based on these three figures. Why I am not following the new CBE past paper? Because this is very easy to pick the materiality as it already given by the engagement partner. But what if in your exam there is a question in which the materiality has not been determined by the audit engagement partner? Then what will you do if there is also these three figures were given such as PBT, total assets and total revenue? So don't get confused. I am repeating again. In this question, the materiality is given by the engagement partner, but we are using the old past paper question in that there was no materiality determined by the engagement partner. Now, why the listed company title and the new audit client mentioned by the examiner? Because this will help you in determining your materiality. We have solved risk questions and on which listed client and new audit client give better understanding in determining the materiality. The audit supervisor has brought the following matters to your attention. Railway operating license. Matty Company has operated a national railway service for the last 19 years. Matty Company's national railway operations have been the subject of adverse publicity. Highlight this thing. Whenever there is an adverse publicity, it will affect your market share, your reputation, goodwill. Over the last 12 months, this can affect the going concern as this is an event or conditions which may cast doubt on the Matty company's ability to continue as going concern in relation to the unreliability of its services, including the late running of its train. We all know it's a normal issue for the plane, for the flights, for the railways that most of the time they didn't reach on time. The license to operate the national railway is put out to tender by the national government every 5 years. Matty Company's existing license is due for renewal on 28 Feb 2006. The current tendering process is approaching completion, and despite the recent operational problems, Matty Company was informed on 30th June 2005 that the company was the government's preferred option. This was on the understanding that the company would address the recent criticism of its poor service levels. The company was also informed that the tender would still be subject to a detailed review. It means the tender is not given by the Matty company, it's still in the detailed review in 1 month's time prior to its being awarded. The National Railway generated 40.2 million of revenue in 2005 and contributed profit before income taxes of 11.2 million this year. Let's see if there is any requirement for the railway. No, there is no requirement. Let's move to the answer sheet. You all know in all the past paper questions, there are some important points for you which give you the overall idea of the question number 3, and there are professional marks as well. Please don't ignore the professional marks, as the professional marks can decide either you will pass this exam or fail. My prayers are with you so that every student can pass this exam in their first attempt. So please be attentive and read the professional skills summary. Now, Matty Company Materiality. Look, this is what I am talking about. The materiality threshold is as follow. Now, in this question, there are three thresholds given by the examiner: total assets, revenue, and PBT. So, in these thresholds, it's difficult to pick the materiality. This is why I am following the previous past paper question approach. Total assets. First, you have to calculate the materiality on total assets. 1%. We all know total assets materiality determination is 1 to 2%. So use the lower end. Again, repeating, do not need to calculate both the ends materiality. Just apply the lower end and calculate it. Total assets. 1% multiplied by 28.4 million, 0.284. Total revenue. 60.1 million multiplied by 0.5%, 0.3005. Profit before tax, 5% multiplied by 10.5 million, 0.525. Now you have calculated all the materiality. Now the question is how to pick the correct materiality for this question. Let's read this requirement. As the client is listed, as the Matty company is a listed client and a new client, so based on that, there are high risk involved. So that's why it's better to use the lower end. Now, you have written that you should have to use the lower end. Why? Because this is a new client. You do not have the prior knowledge of this client. And also the client is a listed entity. So it means there are high rules and regulations. Now, this line gives the examiner the idea of using the 5% means lower end threshold. But again, there is a question, which amount should be selected for the materiality, either total assets, revenue, and PBT. This is the answer is. And the materiality for Matty company is based on profit before tax. Why? Because PBT is the higher one amongst the total assets and total revenue. Look, if you can see, the PBT value is 0.525, whereas the total revenue figure is 0.3005 and total asset is 0.284. So PBT is the higher figure among others. That's why we have chosen PBT as the materiality. Now, I have spent so much time on the materiality discussion. Now, railway operating license matters. The National Railway revenue of 40.2 million and profit before tax of 11.2 million are material to the financial statement, as they are above the materiality amount calculated above based on PBT. The Matty company has faced an adverse publicity over the last 12 months, casting doubt on the Matty company's ability to continue as a going concern. If you don't know about these issues, then I would like you to watch the last topic of the block 3, audit report and its implication. Also, the profitability of the Matty company was reduced by 15.8% this year, whereas the revenue of the Matty company was reduced by 14.8%, showing the impact of negative publicity, and there is still uncertainty whether Matty company may renew the license or not. Look how I link the reduction in the profitability and the revenue with the negative publicity issues and the uncertainty about the renewing the Matty company license. This is how you should have to link your answer if you want to achieve full marks. Now, therefore, Matty company should prepare its financial statement on a going concern basis. Failure to maintain records on a going concern basis affects the audit opinion. Let me know, guys, you are getting it or not. If you are facing any issues, please communicate with me. Because without communication, we can't identify each other weakness. Further, the license will expire next year, but there is still uncertainty whether Matty company can accept the tender as the current tendering process is approaching completion. As the tender will be subject to a detailed review before awarding, so for Matty company will have to improve its poor services, and for this high cost will be required, which affects the profitability, as the profitability of the Matty company is still in the reduction. Therefore, the disclosure regarding the license uncertainty should be disclosed, means the going concern disclosure. Material uncertainty related to going concern disclosure should be disclosed in notes to the financial statement. This is how you should have to write the matters on the completion of the audit. Now, there is a requirement of the evidence as well along with matters. Copy of the license to confirm the expiration date and the cost of the license. Notes of discussion to confirm the management plan for the future feasibility of the railway operations. Copy of the train's log, means timesheets, to confirm the timing of the arrival and departure timing of the trains from the platform. Recalculate the revenue of the railway to confirm that the calculation is accurate. Copy of the railway tickets on a sample basis to confirm the average price of the ticket. This is for the evidence. Now, read the customer list part. Purchase customer list. This is purchased customer list. This is not the internally generated list. This list is purchased by the Matty company. On 1st April 2004, Matty company paid $6.9 million to acquire the customer list of J's Coaches, a business which was terminating its operations. Coaches hires out coaches and drivers to private and public sector customers. Its customer list includes many highly reputable listed companies and government bodies with a customer relationship and trading history going back more than 30 years. On the basis of this trading history and the associated customer loyalty, the management of Matty Company assessed the useful life of the customer list as indefinite. No, this is not correct. The draft statement of financial position as at 31st March 2005 recognizes the customer list as an intangible asset at a total carrying amount of $6.9 million. In the second half of the reporting period, however, two of Jess Coach's largest clients moved to a new competitor, means the two new clients moved to the competitor. The management of Matty Company believed that while it would be difficult to identify a sales value for the customer list at the reporting date, the estimate the value Whenever there is a word estimate, be attentive, guys. Increase your professional skepticism. They estimate the value in use of the customer list to be 7.2 million. Now, let's see how to solve this part. Purchase customer list matters. The value of the customer list recognized in the financial statement is material to the financial statement as it is 6.9 million above the materiality amount calculated based on PBT. As per IAS 38, intangible assets, purchased intangible assets are recognized in the financial statement if there is a probable chances of economic benefit and the cost is reliably measured. Of course, if you are paying so much, this amount means material amount, then there is a probable chance of economic benefit and also the cost is reliably measured. As its customer list is a purchased intangible asset, it meets the recognition criteria by material cost of $6.9 million. However, the management of Matty Company assist the useful life of the customer list as indefinite is incorrect because it is not indefinite as the customer list has a definite life till the date the customer is associated. If the customer is disassociated, then of course you can't use their list. You can't use their number, their contact, their emails, anything. They may sue you. Further, for the determination of useful life, following factors of risk associated with the intangible asset or whether the intangible asset is dependent on technology should be determined. Management should amortize the customer list over its definite life after calculating it with an expert. As useful life involves subjectivity, this incorrect recognition of the customer list results in an overstatement of non-current assets and profit. Look, guys, this is how you should have to explain each and everything. So make sure you guys are watching these lectures and practice by your own. However, two of Jazz Coach's largest clients moved to a new competitor. This is an indication of an impairment in the customer list as measured to customers move to the competitors. As per IAS 36, an impairment loss should be recorded in the profit and loss account. Impairment is calculated by the difference between the carrying amount and the recoverable amount, which is higher of fair value less cost to sell or value in use. Further, the value in use is the value of an asset that is in use, means the value which you can generate by continuing use of that asset. Management has incorrectly calculated the value in use based on estimation, which is not justifiable as the estimate involves subjectivity, complexity, and judgments. Furthermore, there is a risk that management may not record the impairment, which results in an overstatement of assets and profit. We all know estimation is an inherent risk, means the nature of an estimation increases the risk from the start. Now, evidence. Copy of the purchase agreement to confirm the cost of the customer list. Screenshots of the customer list on a sample basis to confirm the type of customers. Notes of discussion with the management to confirm the basis on which management has recognized the complete 6.9 million as an intangible asset. Results of recalculation of the value in use by the management to confirm the estimates used by the management are accurate and reliable. Discuss with management the basis on which management assessed the useful life of the customer list as indefinite. So guys, this is how you should have to explain your answer. Now, let me show you the question again. Look, in the question, This is a new question on your CBE platform. Previously, it was a different question. If you search on the Google, then you will get the old question. In that question, there were three parts. But now in the new CBE question, this there are two parts. Part one for the railway operating, part two for the purchase customer list. Where is the one part? The examiner removes the one part, and in addition to that part, the examiner adds explain the audit evidence you would expect to find during your review. Let me tell you what was the third part. Okay, it was about the inconsistency between the financial statement and the chairman's review report. If you watched my Block 3 lecture Audit Report and its implication, in which there is a topic of other information. Other information means any information other than the financial statement should be reported in the other information paragraph in the auditor's report. Usually, we as an auditor not provide opinion on the other information. If there is any inconsistency in the other information, such as director's report, chairman's review report, or company accounts, then we should discuss it with the management to communicate them to resolve this inconsistency. If management did not resolve the inconsistency, then we will communicate it to those charged with governance. And if the matter remains unresolved, then auditor should include this matter in the audit report under the other information paragraph. Why? For the better or clear understanding of the users of the financial statement. So this part was removed from this question, but we have the answer of that part in our answer sheet. So let's read the answer. I have explained the whole scenario, which is not written in the new paper, but if any student search on the internet, then you will easily find this question. Okay. Okay, if any student want to search this question on the Google, then just type March June 21 ACCA AAA exam paper. Then you will get this question in which the part 3 is already there. Chairman's statement 5 marks matters. The profit before tax of this year is reduced by 52.5. There is an inconsistency between the chairman's performance report and the draft financial figures of the Matty company. This line means in the chairman's review report, it's mentioned that the profit is increased, but in the draft financial statement, the profit is decreased. So there is inconsistency. This is written. Matty Company, being a listed entity, should resolve this inconsistency as it shows negligence towards the stakeholders. Furthermore, the business is not growing even if it is declining as revenue this year is reduced by 35%. The chairman, being the senior person of the organization, should refrain from making such a statement, as such statements are factually incorrect and portray the best view of the financial instead of a true and fair view. Also, if you remember, this is a listed entity, and in the listed entity, the shareholder is more attractive towards the wealth, means the more the profit, they will get better return dividend. So this kind of inconsistency will affect or impact the shareholders. Management should resolve this inconsistency as auditors do not express opinions on the other information but shall include the opinion that there is inconsistency in the other information paragraph in the audit report. Evidence. Notes of discussion with the chairman to confirm the basis on which the chairman claims such growth. Copy of the chairman report to confirm the basis used by the chairman in making a performance review report. Now, part B. Let me tell you or show you the Update and draft auditors report. Okay, this is for the part B. It is now 22 July 2005 and all matters in relation to the purchased customer list have now been satisfactorily resolved. It means the only issue which is unresolved is about the license, railway operating license. Following the submission of a customer petition to the government complaining about the company's poor services levels on 19 July 2005, the government released a statement announcing that it had withdrawn Matty Company's preferred bidder status and was reopening the tender process for the National Railway license. It means the Matty Company license is not renewed yet. The company's finance director has provided details of a short disclosure note he plans to include in the financial statements, which refers to the uncertainties in relation to the current status of the tender and possible going concern issues, which might arise for the company as a result. The disclosure note concludes with a statement that the management of Matty Company is very confident. Again, the management is confident. Look, management is always confident in every situation. Even if they have one penny in their account, then still they will be confident that it will retain the national railway license for at least a further 5 years. Wow, what a joke. The draft auditor's report includes an unmodified audit opinion and a key audit matter (CAM) section, which refers to the disclosures note described above and to related uncertainties in relation to Matty Company's going concern. Let's move to the answer. With reference to Exhibit 2 and assuming that no further adjustment will be made to the financial statement in relation to the railway operating license or the chairman's statement, evaluate the appropriateness of the draft auditor's report produced by audit supervisor. The draft auditor's report is not appropriate because the audit opinion should be written in the opinion paragraph which comes above the basis of the opinion paragraph and key audit matter section. Short disclosure is not appropriate. There should be a proper material uncertainty relating to going concern paragraph in the audit report. The opinion should be revised as if the finance director did not make an adequate disclosure relating to the going concern, then the opinion will be qualified if the effect is material. Further, the reason of misstatement going concern as uncertainty should be mentioned in the basis of opinion paragraph. The overall conclusion of the part B is that there is a misstatement as the impact is material. We studied in the part A. Look this one. The impact is material as the amount of misstatement is greater than the material T. So, if the management does not make a disclosure of the material uncertainty relating to going concern paragraph, then of course this will be a misstatement and the effect is material. So, auditor should express a qualified opinion. And if the management agreed to include an adequate disclosures in the financial statement, then auditor should include MURTGC paragraph in his report. It means audit report is unmodified. So student, that's it for today's class. If you have any queries, any questions, feel free to ask. It's my recommendation again for you. Please watch all the previous class lectures. If any student just start their preparation or lectures for AAA now, trust me, still you have time if you follow my approach. If any guy or any student face any issues, you can communicate with me privately. You can comment down, I will reply you. And if you want to communicate with me via WhatsApp or email, then also tell me. I will share the link of both the mediums with you. So take care, best wishes, do your practice.